Morning, everybody. My name is Keith Warburton, and I'm going to be hosting this session, which is being run by Nexia on investing and doing business in France. We'll talk you through what we're going to talk about in a couple of minutes, but just before I do that, just one or two very quick words about Nexia. If you go to the next slide, please. So, as the slide there says, who is Nexia? So, I'm sure that many of you are aware of Nexia, but just in case you're not, Nexia is a leading worldwide network of independent accounting and consulting firms that provides comprehensive portfolio of audit, accountancy, tax advisory, and business services. And Nexia works with its member firms around the world, leveraging the strength of that network to enable the delivery of global solutions by its member firms to clients. And you can see a long list of statistics there about Nexia, which has a combined $2.5 billion in fees. They've got 519 offices globally, which are located in 119 different countries. So it's a truly global network that can help your clients navigate its way around a very complex global trading environment. But today we're going to be focusing specifically on investing and doing business in France. And I think it's a very apt time to be talking about something like this. As we're all very aware, we are in quite an unusual and new global trading environment. Many of the traditional trading partnerships seem to be under stress and are being fractured as we speak. And I think many of our clients are looking at alternative markets. They're looking for stability, they're looking for growth. And that's why I think looking at a country such as France, which is obviously one of the major European markets, I think that's why this time is a good time for many of our clients to be looking at the potential that France undoubtedly has. And that's what we're going to try and do today. We're going to try and help you to navigate and steer your way through to doing successful business in France, or helping your clients to do successful business in France. And we've put together what we feel is a great panel of experts who are going to guide you on this journey. Next slide, please, Alistair. And so I've just briefly introduced all of the speakers, although they will introduce themselves more thoroughly as we go through. So we've got Mélisande Roche from Inward Investment in France, from Business France, and she's going to talk about business opportunities in France from a kind of macro perspective, looking at the market conditions in France and why now is a good time to be looking at France as an investment opportunity. And then we're joined by two partners from Nexia S&A in France. First of all, we have Bettina Kugler, who's going to talk to us about how to set up a company in France. And then we also have Benjamin Goet, who's a lawyer and a tax partner, and he's obviously going to talk to us about the area of the tax implications of setting up a business in France. And finally, I'm going to speak a little bit. I'm the CEO of a company called Global Business Culture. We're a niche training organization that looks specifically at the impact of cultural differences when people are doing cross-border work. And so I'll talk a little bit about some of the cultural aspects of working with France. So I think we've got a pretty comprehensive overview for you here. As we go through, I'm sure that many questions will occur to you. And so if you have questions, if you'd like to write them in the chat function, we have allocated about 15 minutes at the end of the session to go through any questions that people have. So please feel free to write your questions in the chat function. I'll be keeping a view on them. If there are any that come up which are very pertinent to one of the speakers as they're speaking, I may raise that question at that point, but otherwise we'll save them to the end. So I'm going to stop talking now and hand over to Melisande.
Thank you, Keith. Good morning, everyone, and welcome to this webinar, which I'm happy to participate to. I'm Melisande Roche, the head of the Inward Investment team at our office here in London, in the UK. Business France is the official organization for the internationalization of the French economy. So we have three missions. We help French companies to export abroad. We attract companies to invest in France, and also we operate a youth mobility scheme that is called the VIE, which allows young graduates to work abroad and at a competitive cost for companies. Along with my team here in London, we help British and Irish companies to set up their office and expand their activities in France. And our day-to-day mission is actually to identify companies, business leaders who have an interest for the French market and support them in their efforts to expand to France. We do also organize events throughout the year, and just like this one, we also participate to webinars and seminars about doing business in France. Next slide, please. So today is quite a special day to talk about doing business in France. Probably you know why, because it's, as we speak, the Choose France Summit. The 8th edition is actually about to start at Château de Versailles. It's an annual event around the French government and 200 foreign CEOs that are gathering to talk business in France with French authorities, but also French corporates and startups. And every year there are some announcements of projects investing in France. Those one on the slide are from last year. And of course, I invite you to follow up the news today to hear more about the one that will be announced today. Last year, as far as the British companies were involved and that our team helped, there were GSK, for example, and also Revolut. Next slide, please. So just a few days ago, last Thursday, the EY report on French attractiveness was published. And it was confirmed that France was the first leading European country when it comes to foreign direct investments, and that's for the 6th consecutive year. So it's quite interesting to notice that France remains very attractive, especially in terms of industrial destination. Last year we had, France welcomed 415 industrial projects. And the main reason for that, we'll go back to that later on during the presentation, but France has put together fast-track procedures for industrial players to invest in France. Also, the availability of skills is quite important, and the government has put together a strategy on specific sectors to focus on, and therefore we can see that in Europe, France remains a quite attractive country for industrial investment. And that's the same thing for R&D and innovative projects. Last year, France attracted 104 investments. And that's something that is being supported by quite strong policies and initiatives from the government to help startups and corporates to work together. So having a strong research ecosystem with universities, but also quite strong financing tools. And something also that is fast growing is the number of investment in terms of AI and quantum in France. Last year, there were 41 projects in AI that were announced and launched, compared to 27 in the UK and 25 in Spain. So France is also very attractive for the generative AI solution technologies. Next slide, please. And in terms of number of projects, just so you have an idea of how attractive France is, France welcomed 1,000 688 investment projects representing over 37,000 jobs maintained or created. The main investors are the US, Germany, and the UK. And in terms of the breakdown across France, it's mainly in Île-de-France, so the Paris region, Hauts-de-France, which is northern France, with the main city being Lille, and also AURA, Auvergne-Rhône-Alpes, which is the Lyon region. As a third main region to host foreign investments. Something also worth noticing is that out of the 15 most attractive regional areas, there were 5 French regions. So the 3 I mentioned earlier, but also Occitanie, which is the south-western part of France with Toulouse, and also Grand Est, the Strasbourg area. So I won't go into too much detail in terms of sectors, where to go when you're considering France. Depending on the regions, we can help you find the right location because we have some clusters, players, and so on and so forth that helps you decide where, or your clients decide where to go in France. But I'm happy to go further during the Q&A part. Next slide, please, Alistair. So let's see why France is so attractive. I gathered 5 main reasons, and the first one being that France is obviously a significant and major market. It's the second largest one in Europe. It's very central. It gives you and your clients access to over 450 million consumers. The economy has been quite resilient with a GDP at plus 1.1% last year. And I would say also the French economy has grown more and more open to international investment. We can see that with the impact of the foreign investments regarding France revenues. 22% is supported by foreign investment, and in terms of exportation, it's nearly 30%. So it's pretty strong, and it's pretty supporting well the French economy. Next slide, please. The second reason is that historically France has very strong traditional industries that are still playing a great role in the economy. Of course, you have the agri-food industry, which represent a third of the overall trade balance for France, so remaining very strong. Also the automotive, clearly, northern part of France is pretty well known for hosting great players, industrial players. In the aerospace, it's worth having in mind that aside from the US, France is the only country that has the full value chain for aerospace, from design, production to maintenance. And you have great players such as Safran, Thales, and so on. And also it would be impartial to remain that those 3, to stay just mentioning those 3 industrial without mentioning the luxury, of course, is one of the 5th largest market for luxury in France. Those are the traditional ones, but next slide, please. There are also some fast growing other industrial new sectors. Of course, healthcare is pretty strong, growing fast with some initiative financing tools, but also policies to foster investment in healthcare and find new solutions. Sports has been also growing pretty fast, and esports as well. You probably know that France hosted the World Rugby World Cup and the Olympics as well. And so it has, of course, attracted new solutions in sports and also supporting local but also foreign investment in that field. The digital economy is also pretty strong, very wide. Obviously, you have the screen industries, which is also quite well spread in France. The AI I mentioned earlier, the quantum, also fintech is very, very fast growing in France for the last 2 years. I really care about mentioning the green transition because France has put a lot of efforts in supporting green investments, and we're going to go further at the end of the presentation about these topics. Next slide, please. So the third reason why France is attractive is that it has carried some very major business-friendly reforms. For example, it has lowered the corporate tax from 33% down to 25%, which is quite significant, and has put France back into the game of the taxation competition in Europe. Other reforms has also pushed forward in terms of the labor and simplification procedures for industrial investment, for example, as well. We've seen also a lot of investment and policies in the field of education. So we see more and more apprenticeship, but also we see a high rate of employment for young graduates. So reforms that have already been proved successful over the last 4 years. Thank you for the next slide. The fourth reason would be the talents. That's something that obviously interests a lot of companies, especially if they are developing new solutions. And so France is quite well known for influential figures in art, literature, science, as well as engineering, thanks to well-known, worldly well-known schools. Just to name a few, of course, you have La Sorbonne University, Polytechnique, but also Université Paris Sciences et Lettres, which are quite very well known. And the government also put together some other initiatives like les écoles de production, helping corporates and manufacturers to train new skills for jobs of today's, but also for tomorrow. So it's been quite noticeable in terms of supporting new talents to come into the markets. And next slides, please. And not only France has talents, it also attracts talents. You may have heard about Choose France for Science in response to the new administration in the US. So France has offers different kind of visas, and some are fast-tracked process visa, family-friendly. If you are interested in learning more about visa opportunities or social security, personal taxation, driving license, and so any questions you may have about relocate yourself to France, we have a dedicated team, experts at our office in Paris, but they operate a very comprehensive website called welcometofrance.fr. If you're very interested by this matter, you can actually personalize your next step depending on your own situation and find out which visa is the most appropriate for you. Next slide, please. And the fifth reason, that's something that is starting to be quite renowned. France is very much on supporting innovation and R&D. It has developed some powerful financing tools for innovation and R&D. The main one being the research tax credit called CIR, for Crédit d'impôt recherche, which supports is a tax rebate of 30% of your overall R&D expenses. You don't need to to generate revenues to benefit from it, and as long as you are spending money on R&D, you can claim your research tax credit. And it's been supported as well by clusters across the country. That's a map of just a few of them in different topics and themes. Those clusters are not only providing financing regional incentive, but also a network between corporates, universities, and startups to work together and develop new technologies. So that's also a way to connect with the local ecosystems across the country. And next slide, please. Last but not least, I mentioned it a bit earlier, France has put together a very ambitious national plan called France 2030 that has a goal of achieving the carbon neutrality by 2050. And this plan is actually supporting not only emerging technologies, but also supporting and helping decarbonization. And so it focused on 3 pillars. The first one being how to better live. So anything with healthcare and agri-food. The second pillar is how to better understand the world we live in. So technologies to explore the deep sea, technologies to explore the space. And the last pillar is about how to better produce. So it's a very wide broad of sectors, but it could be SMRs, small nuclear reactor, hydrogen, renewable energy. It's also about hybrid and electric cars, carbon aviation. So very broad sectors that has been supported by this plan over the last 4 years. This 54 billion plans has already engaged 38 billion in 5,500 projects across the country. So it's been quite strong, quite helpful. The requirement for it is to have a presence in France or to partner with a French company, and you can also have access to some call for proposals and financing tools throughout this program. So as a conclusion, there are, I just mentioned 5 main reasons: the economy, the strong industries, the growing industries, the talent, the reforms, and the innovation R&D supports that France put together to attract more businesses. But there are also other reasons. I would be happy to expand on them if you have any questions. And so along with our teams in London, in Paris, but also with our regional partners in France, we'd be very happy to help you understand the French market, the business environment, to facilitate some connection, to identify the right location, right staff, incentives, and of course to help you find business opportunities. Thank you for listening, and I'm handing it over to Benjamin and Bettina. Thank you.
Hello everyone. So thanks a lot, Melisande, for that broad presentation on the France attractiveness. I am Benjamin Goé. I'm a tax partner at Nexia S.N.A. and I'm with Bettina, who is also a more audit and accounting partner. And we are both part of a multidisciplinary firm in Paris, which proposes to help businesses in the development of their business and maintenance of their business in France on the financial aspects and also legal aspects. So we're in that context, we assist a lot foreign companies, groups, persons to invest in France and to develop business in France. This is what we do every day. So now we are talking about the way to structure your investment in France and to carry out business in France. Can we go to the next slide, please? And next one, and next one, sorry. So the first question that we have as practitioners when you have foreign investors that want to carry out business in France is to say, well, which vehicle should I set up to carry out a business in France? And the first thing is that France has a lot of, you can carry out business in a lot of ways in France. And it really depends on what you intend to do. If you want to be in France on a temporary basis or just collect some market information, you can have a very light structure such as a liaison office. And if you want to have a very structured activity or even a listed entity, you can have and set up a company. So the type of structure that you can implement goes from a simple liaison office to a real large company. Next slide, please. But yeah, but the typical question we have with foreign investors is to say, well, should I establish a branch, or should I establish a real company, a French company in France? And the difference, and this is the typical question that I have had since I've worked, I think, and you have pros and cons in both forms. A branch has no, let's say, has no separate personality from the head office. If, for example, you have a UK company that has a branch in France, the branch belongs to the UK company, and it is not separate from that company. It's lighter in terms of organization. You have less constraints, legal constraints on that, and you can close it very easily. The cons for a branch is the fact that you have no limitation of liability. You can have complicated VAT rules, and you're still subject to corporate income tax, so you still have to hold accounts in French GAAP. But Bettina will talk about that in a few minutes. Conversely, when you want to have a structured business in France, you can set up a subsidiary, which is a real legal entity, a French company, which has its own legal personality separate from the parent company that is abroad. And in that respect, you can have many advantages, such as limitation of liability. You can have a more deep print in the country. It facilitates in some ways contracts with providers or clients, and globally it also facilitates a lot of aspects and relationships with the local authorities. The cons is that it's more burdensome from a legal perspective, more burdensome to create and maintain. And you have accounting obligations, you have tax obligations, and cost of closure is a bit more complex. Closure is a bit more complex and costly. If we can go to the next slide. And if we are talking about companies, France has a very, very flexible corporate law. We have unlimited liability companies, such as partnerships that you can see in the UK, but we also have a lot of forms of liability companies. And it really depends on the project that you want to carry out in France or more broadly in Europe, in the sense that you can have a legal form that is more suitable for small companies, or you can also, which is a SARL, so limited liability company, which would be a bit like a limited in the UK. And you can have more structured and companies, forms of companies that are more tailored for big businesses, multinational business, and so on, which is the SA, which is a joint stock company. To be honest, in practice, the most common form of companies that we set up is what we call a SAS, which is a simplified joint stock company, which is the most flexible form of company that you can set up in France, because you don't need to have, you can have one shareholder, no minimum capital, you have a limited liability, and you can do whatever, you can structure it the way you want, and you can draft the article of association the way you want. So if you want to put corporate governance structures or not, you're free to do so. So what we do in general is a simplified joint stock company, which is the most common form of company and the easiest way to do. One practical aspect, when you want to set up a company in France, the administrative work for establishing the company is pretty simple and straightforward in the sense that you have to draft articles of association, gather some documentation, and then you file that with the French commercial court. So all in all, the process is pretty quick. It's generally 2 weeks. One tricky aspect lies with the bank system and banking system, because when you want to open a company in France, you need to have a bank account, at least to deposit the share capital, which can be €1. And at the moment, what we observe is that the KYCs, know your client procedures, carried out by the banks can be quite lengthy. And to be honest, this is what takes the most of the time when you want to register a company. So you have 2 weeks for the administrative stuff, but it can take 3 weeks for the banks to open a bank account. So all in all, when you want to register, to create a company in France, just anticipate that it can take up to 1.5 months. And that's a real practical aspect there. If we go to the next slide, please. Next slide. Sorry for that. Yeah, and now we have just gave you an overview on company law. When you have an activity in France, you'll be subject to tax, as in any country, to be honest. And in France, and this is where we have some complexity. French tax system. Can we go to the next slide? French tax system is very complex in the sense that you will be subject to the type of taxes that you encounter in all European countries. So you'll have corporate tax, VAT, some local business tax, and we have a bunch of taxes that can apply depending on your industry, location, and so on. The main tax that applies to businesses is the corporate income tax. And this is something, if you work with EU countries, you won't be surprised there, because the rules, or what we do in France is alike what all European or developed countries do, in the sense that corporate income tax corresponds to your tax basis corresponds to your profits, your revenue less your expenses, with a bunch of non-deductible expenses. The tax rate, we have a territorial tax system for corporate tax, in the sense that you only tax in France the profits realized in France. This means that all the profits realized by a French company abroad are not taxed in France. As Melissa said, our tax rate is 25%, which is within the European standard, let's say. It can be reduced to 15% for small and medium businesses, up to 40,000 euros profit. And when your corporate tax liability exceeds a certain threshold, you have a surtax, a 3.3% surtax. So all in all, what you have to bear in mind is that the corporate income tax rate is 25.8%. For corporate tax rules, you'll find the rules that you can find in other EU jurisdictions, such as management of tax losses. You can carry, if you realize a loss for a given year, you can carry forward them indefinitely. You have, however, a limit for the use of losses per financial year. Capital gain tax. We have a participation exemption regime for capital gains that provides for 88% exemption on capital gains deriving from the sale of shares, whether shares in French companies or foreign companies. We have a participation exemption regime for dividends, which is a European, what provides for a 95 or 99% exemption. We have a group scheme. We have adopted in France all the European directive related to tax neutral reorganization. And as Melissa has stressed before, we have some incentives such as the R&D tax credit. We also have a patent box regime that provides for 10% taxation on IP income. We have a lot of incentive for companies established in specific areas. We have trading tax credits and so on. And we have also, as you may have observed in other countries, we have also all the anti-avoidance arsenal that you can find in many jurisdictions. We have interest deduction limitation rules so that you cannot, so as to avoid thinly capitalized entities. We have transfer pricing regulations. We have CFC rules. We have substance over form regulations and so on. So I would say corporate tax is something very similar to what you can experience in the UK or in the developed countries. Second big tax is VAT, and it's not a surprise. It's a European regime. We apply the European directives there. Our standard rate is 20%. And we have a three reduced rate, 10%, 5.5%, 2.1% that applies to various products or services. One interesting point, but I'll come to that in a few seconds, is we have access, if you carry business from France and you sell, you have distance sales and so on, you have access to the one-stop shop regimes that allows you to declare in France all your transactions made within Europe, B2C transactions. And we also have an extensive view on the reverse charge regime. We have reverse charge on imports, reverse charge on EU acquisition. This means that when you import a good in France, you don't have to advance VAT. You can reverse charge that on your French VAT return. So you collect and deduct VAT at the same time. So it's zero at the end. We also have local taxes. We have property tax when you own premises. We have a land tax on business premises you use. And you have a contribution on added value, which was meant to disappear in the next 2 years. But given the budgetary constraint in France, the reform has been delayed. So that tax still applies. And we have many other taxes applicable to businesses. We have remunerations related tax. We have transfer tax that applies to transfers of certain assets, whether tangible or intangibles. And we have a lot of indirect taxes that applies to specific industries. And to be honest, we have 90 plus type of taxes existing in France, and this is where the complexity is. So tax-wise, you'll have the main taxes, corporate income tax, VAT, local taxes, and you should also, when you set up a business in France, be careful about the type of taxes that could apply to your business. And this is a real complex area. Can we go to the next slide? And when you're subject to tax in France, then in order to support your tax returns, you'll have, or we can jump directly to the accounting part. When you have tax obligations in France and you have a business in France, you're obliged at some point to hold accounts in France.
You want to jump in the accounting? I'll try to I'll try to be quick, so Keith, you can also have a few minutes. So Alistair, you can go to the accounting information. Basically, what's important to know on the accounting, once it's less different than tax, so that's the good news. We still have a legal, it's a bit more further, Alistair, but you'll reach accounting informations. So for accounting rules, everything, so we have the Accounting Standards Authority, ANC. This is the organization to define the accounting rules that you will need to follow. And as Benjamin said, we have, well, you would need to have accounts, whether you have a branch or a subsidiary anyway. the Accounting Standards Authority tends to have accounting rules to be closer and closer to international standards anyway, so you wouldn't have huge differences, I assume, depending on the country you would be investing from. You would still see the main principles such as going concern, consistency of the methods applied, cutoff between each fiscal year that you would find, and to prepare truthful and honest set of accounts, giving a fair representation of your assets and the value they would have, and the completeness of your liabilities. To do so, you would have to book your entries chronologically based on your business, and to assess once in a year an inventory on the assets to make sure you don't have any depreciation and check what you have. Once you have all of this, you would have your accounting. When we say accounting in France, we mean that you followed the French chart of accounts. So this is one of the specifics that of the French specifics. The chart of accounts is mandatory. The number of the account and the description, every entry you're booking should go in a specific account. That would be some financial, I would say, differences with usual countries investing in France. So even though you don't have any adjustment to book between what you would have locally and in the French gaps, you would still have to do some mapping to be able to prepare proper financial statements in France. Also quite information, I'm not sure it's specific, but you would need to book entries in French for in case of tax control, so the tax authorities could check everything and understand everything, and you would need to prepare some financial statements in French to provide them on a yearly basis to the French commercial courts. When we say financial statements, we're saying, as usually, a balance sheet prepared with assets and liabilities by function, and you would have long-term assets and liabilities and current. We're saying an income statement also by function, where you would have first operating revenues and expenses, then financial revenues, expenses, extraordinary revenues, expenses. And additionally to these two balance sheet and P&L, you will need to have some notes that are part of the financial statements for the French financial statements, detailing what methods you used to prepare your financial accounts, detailing some of the accounts that you would have, some items you would have in the accounts. So it's basically everything you still have in your accounting, and a few more information like the average number of employees, for example. So this is for any subsidiary that someone may have in France. In case you have a group of companies with the mother company in France with more than 200 employees, 48 million turnover, and 24 million total balance sheets, if you reach two of these criteria 2 years in a row, you're supposed to do consolidated financial accounts in France, unless one of the exemptions for international groups would be that you have a bigger group and the mother company already publishes some consolidated accounts, and this subgroup with the French mother is included in its scope. Then you wouldn't have to prepare it on a French basis. Once, then you can change, Alastair, once you've done the accounting, possibly you would need to appoint a statutory auditor in France. So there would be two setups, let's say. If you have a company, a standalone company, when do you need to have auditors is when you have more than two of these criteria, more than 50 employees, 10 million turnover, and 5 million total balance sheet. Then it's just 1 year. If you reach two of these criteria, let's say 2025, for 2026, you will need to appoint an auditor. When we say appoint an auditor in France, the engagement is 6 years. So that's also one of the main differences. It's 6 years, even if the mother company changes its own auditor. And for consolidated accounts, we would have joint audits. but it's if you need to publish and to prepare, if you have the obligation to prepare consolidated accounts in France. And if you're not in this case, it doesn't mean you don't need an auditor. Since 2019, the government considers also small groups, and a small group is said of a group of units. Once you have one in France, but it could be units all over the world. And this small group altogether is above 2 of the same criteria, so 50 employees, 8 million turnover, and 4 million total balance sheet. Then, if you're in this case, the mother company needs to update accounts, we would have joint audits. But it's if you need to publish and to prepare, if you have the obligation to prepare consolidated accounts in France. And if you're not in this case, it doesn't mean you don't need an auditor. Since 2019, the government considers also small groups, and a small group is said of a group of units. Once you have one in France, but it could be units all over the world. And this small group altogether is above 2 of the same criteria, so 50 employees, 8 million turnover, and 4 million total balance sheet. Then, if you're in this case, the mother company needs to appoint an auditor, and each subsidiary of this small group who would reach 2 of the criteria divided by 2, so more than 25 employees, more than 5 million turnover, and 2.5 million total balance sheet, so only 2 of the 3, then you would have to appoint locally an auditor also. This would mean either 6 years, a usual statutory audits, or you can reduce it to 3 years with 1 more report to provide. That's the flexibility you would have. So I've been quite quick, and then maybe Alastair or Benjamin, you want to talk about labor law very quickly?
Yeah, very quickly. If we have a takeaway on labor law, the first thing is you have two aspects. The first that we are known for. First aspect is it's a very complex area in France as well. But if we are talking about what makes our reputation globally, it's working time. It's true in France, our statutory working hours are 35 hours per week. And this is the reference, but you have many derogations to that. You can work on a rather than on hours, you can work on days basis. But what you have to know is that 35 hours is the principle, but you have many exceptions. Second, French don't spend all their time on holidays. They have 5 weeks holidays, as many countries in Europe, 10 bank holidays, which is variable because when your bank holiday is on a Sunday, it's on a Sunday. So you don't have the Monday off. So it's more or less 5 weeks plus 10 bank holidays. And sometimes if you go above 35 hours per week, you have some additional holidays, but more or less we are in the European, let's say, average. Second aspect, very important, social security charges. In France, we have a social security system that is paid by contributions paid by employers and employees. To give you an idea, employer share of social contribution is 42% of gross wage, and employee shares, which is withheld on the salary, is 21%. That's also an average, but you have a lot of reduction schemes. That's the takeaway on the employment law. And I'll leave the floor to Keith.
Just quickly on Nexia S.N.A., just so you know, we're considered, as Benjamin said, as a one-stop shop, let's say, for corporate finance departments. And the firm represents the Nexia network in France with around 600 employees and 70 million revenues. And so Nexia S.N.A. is a CPA firm, and thanks to its expertise in the traditional fields of public accounting and auditing, the firm has developed strong consulting activities in several areas, such as, it's below Alastair, but tax, data, ESG, transaction services, and everything that would help financial departments, basically. And ESG, we didn't talk, sorry, I know for Melissa on ESG with the audit, and because we have now some European laws that been changed, and so the kickoff would probably be more in 2 years. So we can talk about it later on. Kees, the floor is yours. You're on mute.
Yeah, thanks everybody. Unbelievably, we're already 50 minutes into the session, and we did want to leave just a few minutes at the end to ask a couple of questions. So I'm just going to say a very few brief words on the cultural side. I just want to talk about the cultural aspects of doing business in France. And as you can see from that slide, I represent a company called Global Business Culture, and we're a specialist training and consultancy organization who work exclusively in the field of the impact that international cultural differences can have when people work cross-border. And as you can see, we're in a number of different locations around the world. And what we've just been listening to and talking about are some of the really important, vital and complex areas of doing business in a country like France. And of course, we could go through those challenges in any country in the world, and each country has its own unique approach to all of these legal and accountancy issues. But in the same way, each country has its own unique approach to business. And we do a lot of work. Can I have the next slide, please, Alistair? We do a lot of work with clients who are working into France. Either they're starting businesses in France, or very often we get involved in post-merger and acquisition situations where a foreign entity is buying a company in France and then they're trying to integrate their organizations together. And I would say that maybe 25% of our clients will come to us at a very early stage of starting to work in France and say to us from the cultural perspective, what do we need to know before we go into France? What are the differences we're likely to encounter? That's 25% of our clients say that at the early stage, but 75% of our clients come to us and they say, we started an operation in France, or we acquired a company in France 2 years ago, and it's proved to be a little bit more challenging than we had anticipated. And a lot of the challenges they face are very definitely person to person, because business at the end of the day is all around people being able to collaborate effectively together. And we know that it's not always easy to collaborate effectively with people from our own countries. But it becomes more complex when we're working across the barriers of culture and language and time zones, etc. So I've only got about 10 minutes. In fact, I've only got about 3 minutes now. So I thought, rather than give you my view of what some of the cultural challenges are when non-French companies are working in France, I'll just tell you some of the feedback we get from our clients from the USA, from the UK, from Northern Europe, etc. So if you can just go forward, I think we'll have to skip that one, Alistair. So these are some of the things that our clients tell us that they experience when they're working in France with French colleagues. So the first thing that people often say to us is that the French business environment is more hierarchical than they had expected. So we're working a lot with American companies, UK companies, Scandinavian companies, the Dutch, which are much more flatly structured in their business arrangements, and they're going into France expecting it to be very similar to the way it is in their own country. And then they're coming up against the hierarchy, the respect, and one of the things that they very often point to is that when they observe their teams in France, they see that there is more of a distance between the leader and the team than they are familiar with in their own countries. There seems to be a distance between the two, which through their eyes, through their cultural spectacles, they just see as wrong. Now, there are no rights and wrong in any of this. There's only difference. But one of the things they work very hard to do is to try and eliminate that hierarchy and eliminate that distance between leaders and the team. And then they come up against resistance from the local French teams around that. And you get a feeling in the French team sometimes that these overseas entities are trying to colonize them and trying to impose their own views. And that tends to go down quite badly. Another thing that we hear a lot is around the French desire for analysis. Paralysis by analysis, people talk about. And there's a famous joke that's told about international business, where there's an international business meeting, lots of different nationalities there, and the American guy comes up with an idea and the French guy says, well, that's all right in practice, but would it work in theory? And there's a view looking into France from other countries that there's a desire to theoretically analyze anything in very great depth, to look at all the details of everything in very great depth before moving on. And one of the ways in which that manifests itself through overseas eyes is all of that discussion and all of that argumentation is viewed as the French, they're just very argumentative. They just seem to disagree with everything all the time. And they, in our view, focus on the problems rather than looking for solutions. And I think this is to do a little bit with the French education system, with the focus on Cartesian logic that there is in the French education system, and the desire to discuss things and analyze things from oppositional points of view. I lived and worked in France for a number of years. I was managing director of a company in France for a while. And what I came to realize was a big difference between my communication style and the communication style of my French team was that my French team would kind of say, in 2018 this happened, and as a result of this in 2019 we did this, and then in 20 we did the following, and they built up this great logical argument, and then eventually would say to me, and therefore the answer is 20. My approach would be to say, but I think the answer is 22, and then give my reasoning after the answer. So the problem with that was that as the French were going through their very long analysis and reasoning as to why they thought the answer was the answer they thought it was, I just switched off. I was just thinking, oh, just get to the point, please. And I think that when I said, yeah, but I think the answer is 20, without giving any reasoning, I think the French thought, well, he's not given any thought to this. And this caused all kinds of challenges between me and my leadership team. I've got another couple of slides here on cultural differences, but it's already 1 minute to. So I think rather than go through the other slides, I think what I'll just do is I'll just throw one question out to the speakers, the other speakers here, which I think is quite an important one, because we've been talking about some of the technical things. I've briefly talked about some of the cultural things, but if you were, from your experience, Benjamin, Bettina, Melisande, what would you say would be any typical mistakes that foreign companies make when they're trying to enter France as a market? I don't know who'd like to start with that one. Melisande, would you like to say something?
Sure, I can start. Well, we have some companies that have tried to go to France and that have been disappointed. So I think it's very important to get a very deep understanding of the laws, how it works, even the cultural, how to interact with French people. So you get enough information beforehand, and then you start from a good step forward, and that's why business funds exist. It's to make it easier to understand, but also to facilitate along the way. I would say that.
Okay, thank you, Melissa. Benjamin, have you got any tax horror stories of things that people have got wrong going into France?
As you say, well, the most difficulty that foreign investors encounter in France lies with complexity. As you said, French people love complexity.
Start from a good step forward, and that's why business funds exist. It's to make it easier to understand, but also to facilitate along the way. I would say that.
Okay, thank you, Melissa. Benjamin, have you got any tax horror stories of things that people have got wrong going into France?
As you say, well, the most difficulty that foreign investors encounter in France lies with complexity. As you said, French people love complexity and complicated things, and French people are very analytical. And we have a very complex tax legal system, and we have and what sometimes or often surprises of foreign investors is the time it takes to move things forward, because we have a kind of, I wouldn't say, I don't like the word, but we have a kind of bureaucracy associated with the complexity. It's more the complexity that creates time differences rather than bureaucracy. But that's something that surprised, or especially UK investors or American investors are surprised by it takes to set up a company, to move things with the French tax authorities and so on.
Okay, thanks a lot, Benjamin. Bettina, have you got anything you'd like to add?
No, I would say the same. You need to take things in order and to allow enough time to make sure that you've anticipated those few differences.
And I think from my perspective, I kind of echo Benjamin a little bit to say that in the work that we do, especially when we're working with foreign entities who have a subsidiary in France, it would be that for us, we find France one of the most difficult countries to get people to buy into corporate goals. It takes us much longer to convince people in France to get on board than it takes us in certain other countries. And I think that's because of all of that. Look, before we agree to this, we're going to analyze it. We're going to take our time deciding on whether we agree that this is a good idea or not. And that, I think, for foreign companies, foreign head offices, etc., can cause a little bit of frustration. Okay, so we're already slightly over time, and I'm sure that everybody has a very busy day.
Keys to say it's true that it's more it's heavy to move and to take people on board, but then they don't switch boards as easily as they could go. So that would be the upside. Once you've been past that, it's more of a security for people coming in.
Yeah, and the thing that I always say to my clients who are working in France is, don't see that French analysis as a problem, see it as a gift, because they're going to raise lots of ideas that, because you hadn't thought about it in that amount of detail, they're going to come up with some really great, deep, profound ideas. So let them take their time and listen to them and engage them with that. And I think your company globally will benefit from that. It's the knee-jerk, instant frustration reactions that cause the problems, I think. So just before we close, I'd like to thank Alistair, who's done a lot of work behind the scenes in pulling all of this together. To thank all our speakers, Melisson, Bettina, and Benjamin, and of course, most of all, everybody who's taken the time out to listen to us today. I'm sure that everybody, each of the speakers here, and Alistair from Nexia Global Office, we're very happy to take any individual questions that anybody would like to send through to us. If you'd like to engage us, all of the details of everybody were on the slide deck. So once again, thank you very much. Have a great week.